Hello everyone, welcome to Options with Doug, streaming live daily on Bookmap Discord and the Bookmap YouTube channel at 1:30 p.m. Eastern Time. Before I get started, I need to go through the disclosures. General disclosure: all Bookmap limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure: trading futures, equities, and options involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The focus of my presentation is options order flow, the impact of options markets on stocks and futures, and the influence of market maker hedging flow on price action. I have a two-step process for trading, and the first is planning, and I use positional analysis. I look at how traders and market makers are positioned in the options market and how those positions change from day to day to develop a thesis regarding the expected trading range and volatility for the day, as well as a directional bias. And the second step of my process is execution, and I look at real-time order flow in Bookmap and real-time market maker hedging flow in Spotgamma Hero to confirm my thesis and for setups. And just to be clear, I'm using the options market for the basis of my analysis. And I will be talking about setups and a variety of underlyings, both the ES futures as well as a variety of stocks. And I'm just talking about the underlying, but any entry, any setup, long or short, can be taken with futures, options, or shares if you're trading stock. And questions and comments are welcome, and I will be watching both the Options-Doug chat channel in Discord and the chat in YouTube for your questions and comments. So again, feel free to post your on-topic questions and comments. All right, let's get started. So what I want to talk about today, my agenda for today, will first of all go over the news that came out this morning as well as the rest of the week. Then I'll talk about my positional analysis. I'll talk about setups, and I'm going to focus on the S&P 500 and specifically zero DTE options and how they came into play today for the S&P 500. All right, so let's get started. The news, the PPI came out this morning. It was lower than expected or in line with expected, and the market has reacted positively to that. And then tomorrow, retail sales come out at 8:30 a.m. Eastern Time, and then Michigan consumer sentiment at 10 a.m. And that'll wrap up the data for the week. All right, let's take a look at charts. I'm going to start with my positional analysis, and this is the Bookmap chart ES futures, the S&P 500 futures. Before I dig into this chart, I'm going to take a look at a larger time frame. This is the SPX. This is a 20-day, 1-hour chart, and this is Thinkorswim. And I'm just showing SPX, the price, and key gamma levels. These are from Spotgamma. They're provided to Spotgamma subscribers in a variety of platforms. This again is Thinkorswim. And notice that the SPX has been in a pretty narrow trading range. It looks like it may be trying to break out now. The trading range from around 40.70 to 40.35 now again appears to be trying to break out of that range. So that's for the last 10 days. And you can see that here. this narrow trading range, consolidation. All right, let me point out a couple of the key gamma levels. First of all, this is the put wall at 3,900. That's the strike with the largest net negative gamma that can be expected to act as support. Here's the 4,000 level. That is the absolute gamma strike, or the key gamma strike. The strike with the largest absolute gamma. And then here is the 4095 volatility trigger, and also SPX 4100, which has been a key level. You can see that price has been oscillating above and below the 4100 level. And the volatility trigger is Spotgamma's proprietary gamma flip level. Below that level, market makers' position on the gamma curve is negative, and they have to trade with price to hedge their delta exposure. That tends to increase volatility in a negative gamma environment. Then on the other hand, above that level, market makers' position on the gamma curve is positive, and they have to trade against price to hedge their delta exposure, and that tends to subdue volatility in a positive gamma environment. And then finally, here's the 4200 call wall. That's the strike with the largest net positive gamma, and that can be expected to act as resistance. So those are the key levels that are in range on this 20-day 1-hour chart. That's the bigger picture view. Let's take a look at another Thinkorswim chart, and this is just for today. This is a 1-day 1-hour chart showing a couple of key levels here. There again is the 4095 volatility trigger, and the 4100 level acted as support in the morning, and now price is moving higher. All right, let's take a look at Bookmap now. And I've got the same levels on this chart and a few more. What this is showing, first of all, here are the levels that I have on my chart. These are the Spotgamma cloud notes provided to, again, Spotgamma subscribers for a variety of platforms. And for Bookmap, they're provided in the form of cloud notes, which are updated automatically. And for the cloud notes, the only level shown here in play is the 4100 level. I've got more levels on my charts. Here's the 4100 level. Spotgamma is using a 27-point difference between ES and SPX, and I calculated that difference at about 25.5 points today, and I think that's closer to accurate. And you can see that the 4100 level clearly acted as support. So price finally resolved this chop consolidation above that level after a final test of the 4100 level around 10 a.m. And note the aggressive buyers coming in with these green dots. And now price has moved up to the SPY 412 call wall. And for SPY, that is the strike with the largest net positive gamma. That should act as resistance. Although recently the SPY call wall has not done its job very well. And there are a couple of other levels that are in play that are not shown on the Spotgamma column cloud notes. There's the 410 pivot level, the 4110 pivot level, SPX, and there's the SPY 410 key gamma strike, ES 4150, and as I pointed out before, the SPY 412 call wall. And then the next resistance level up is the SPX 4130. So those are the levels that are in play for today. The primary levels really are the 4100 SPX 4100 level that acted as support, and then now price is moving above the SPY 412 call wall. And I'll look at this setup in more detail in a few minutes. So let's continue with the positional analysis now. And there were just a few shifts in levels. For SPY, the volatility trigger shifted lower from 409 yesterday to 408 today. And then again, the call wall shifted lower from 420 yesterday to 412 today. So that should be a ceiling for SPY, and it's not. It's looking like price is accelerating above that level. And then for QQQ, the key gamma strike dropped down from 320 to 315. All right, let's take a look at the gamma charts, and we'll see where those levels come from. There we go. All right, so this is SPX. This chart, this graph, is showing positive gamma or call gamma in the orange bars above the zero line, and below that's negative gamma or put gamma shown with the blue bars. And here's the 4000 strike, the absolute gamma strike. That's pretty obvious. The strike with the largest absolute gamma that can be expected to act as support, resistance, or a magnet for price. Here's the 3900 put wall, the strike with the largest net negative gamma. And then here is the 4200 call wall, the strike with the largest net positive gamma that can be expected to act as resistance. So that's SPX. Let's take a look at SPY. Zoom in again. So here's SPY. And for SPY, 410 is the key gamma strike. Strike with the largest absolute gamma. Here's the 400 put wall. That's pretty obvious. Strike with the largest net negative gamma. And there's the call wall at 420. Strike with the largest net positive gamma. Right, I need to do a refresh. Then we'll take a look at QQQ. So for QQQ, again, the absolute gamma strike, the key gamma strike, has dropped from 320 yesterday to 315 today. And the put wall remains at 300. And then the call wall remains at 320. So that's QQQ. Refresh again. All right, there's another chart here that I want to take a look at. This is the SPX Vanna model, and this is really important to keep track of this information. This chart, this graph, is showing two lines. The first, this light gray line, is showing how market makers' delta notional or delta exposure, shown on the vertical axis, changes with changes in price shown on the horizontal axis. And what this is showing is that market makers' position on the gamma curve will increase as price increases above about this level right here. So when market makers' delta notional increases, they have to sell futures to hedge their delta exposure. And then if price drops in this region of price, they can buy back their shorts. So they're trading against price to hedge their delta exposure. This is typical of a positive gamma environment. Then this purple curve is showing how their delta notional will change when you account for implied volatility. So the light gray line is just showing the change in delta, not accounting for any change in implied volatility. And the purple curve does show that, it does account for that change in applied volatility. Excuse me. And that is the Vanna effect. The change in delta with a change in implied volatility. And this is showing that as price increases, there's really no tailwind from a change in implied volatility. The purple curve is very similar to the light gray curve in a positive gamma environment. Then on the other hand, if price drops down significantly and implied volatility increases, then market makers will have to sell futures to hedge their delta exposure. So that's SPX, and we'll just take a quick look at the gamma curves for SPY. Slightly steeper to the downside, and then QQQ for the NASDAQ. So all in all, very similar Vanna models for the indices, SPX, SPY, and QQQ. And let's just take a look at some data here. I want to point out the gamma notional for SPX, SPY, and QQQ. That's what we'll focus on. Notice all these numbers are positive, so market makers' position on the gamma curve for SPX, SPY, and QQQ is all positive. And these numbers did increase from yesterday, so market makers' position on the gamma curve became more positive. All right, let's take a look at, so that is a lot of my planning preparation for the indices, SPX, SPY, QQQ. Let's take a look at something that I look at for stocks, and this is my key gamma strike list. And I'm just going to go over this briefly. It really has not been a lot of help recently, which is strange. It's been more of a help in the past. But what this is showing is the key gamma strike from yesterday. That's shown in the far right column, the previous key gamma strike. And then this is for today, the current key gamma strike. And I color code these numbers green or red. And obviously there's a lot of red here, indicating that all of these numbers decrease from the previous day. And generally that can be interpreted as bearish. Traders are looking for lower prices and accepting lower prices and positioning themselves in the options market based on that. All right, so let's take a look now at some setups. And first thing that I want to take a look at is the S&P 500. And John, hello, he asked in YouTube, what's easier to read, ES futures or stocks? And stocks, large caps for trading. I find recently that futures are a little bit easier to read, and I'll talk more about that right now as I go through the setup for the S&P 500. All right, so let's take a look at, the first thing I want to take a look at is Hero here. This is the this is from Spotgamma, hedging impact of real-time options. And this is showing price with a white line here. And then this is showing options trades and market maker hedging activity for just the SPX. Now the Spotgamma provides a variety of signals for the S&P 500. So I'm going to look at the SPX, but just for reference, let's take a look at SPY and just a different picture there. Generally bearish. Traders are taking negative delta positions for SPY. And then here's the combined signal for the S&P 500. And this is actually combining it's a combined signal for SPX, SPY, and also new, just in the last couple of days, ES futures. So it's a combined signal for the entire S&P 500. And I'm going to go back to SPX. I thought it provided the best signal for the S&P 500. So let's zoom in on this, and we'll look at Bookmap in just a minute. And notice that this line, this is the all expirations, the purple line. Notice how it is rising even as the ES futures S&P 500 chops around and then finally resolves higher. So that's the total line. And let's take a look now. We can separate out the 0 DTE options with this green line here. So I'm showing puts and calls both for the all expirations and for 0 DTE only. And notice the notional value here is almost identical. So in terms of the notional value, the 0 DTE options, the options that expire today, this is what's driving the SPX. And I think it's what's driving the entire S&P 500, ES futures as well as SPX. And let's take a look at one other thing now. I'm going to go into even more detail and separate out puts and calls, 0 DTE. And this is actually pretty unusual. Typically, traders will buy calls and buy puts, and it's really just a matter of looking at the total signal to see who's winning, and prices, that is often driving price. In this case, both of these numbers are positive. So traders are actually selling puts today. They're selling 0 DTE puts, and they're buying 0 DTE calls. And notice when this signal is separated out, how obvious that this is, that traders are buying calls and price finally resolves higher after chopping around for the first 30 minutes of the RTH session. So let's go take a look at the at Bookmap now. We'll start with the ES futures. I'm going to zoom in. Start with the morning session here. So remember that traders are buying SPX calls that expire today, and they're also selling puts. They're buying calls more aggressively. And price starts to move higher. Here's the first test of the 4100 level, SPX 4100, and the second test. And notice after that second test, order flow shifts bullish. Notice the green volume dots there. Those are market buy orders. Starting to move price higher. And that's confirmed with cumulative volume delta here, this dark blue line rising. And there are a few iceberg buys. Here 540, 534, large traders buying as price moves up. With iceberg orders they use to hide their size. And then finally stop orders shown by this rising orange yellow line here in the subchart, rising. Stop orders fueling the move higher as well, shown there with a small green dot, 800. This all levels off. Whoops. Levels off, price consolidates for quite a while between the SPY 410 key gamma strike and then the SPY 411 level. Let's go back and take a look at Hero. And notice how steep this initial line is to move price up between the SPY 410 and SPY 411 level. It levels off, price slowly trends higher. Traders continue to buy calls less aggressively, continue to sell puts, and then price resumes higher as aggressive call buyers come in again. And this green line is showing call buyers, the rising line, positive delta, showing call buyers, and then this kind of purple blue line is showing put sellers, and that's shown up here in the legend. All right, let's zoom out and take a look at the rest of the day. So they continue to buy 0 DTE calls and sell puts. Let's go take a look at Bookmap again. So now price has made it up to the SPX 4130 resistance level, and that was noted as resistance in the Spotgamma AM Founders Note. And one thing to keep in mind, well, first of all, Brent Kachuba, the founder of Spotgamma, did a presentation on research about 0 DTE options. It's on YouTube, available for everyone. I put a link to that presentation in in Discord, in the Options-Doug channel in Discord, and it's worth a look. It's primarily research. One thing that that Brent presents in the research is how traders will monetize these 0 DTE options at a certain time in the day. And let me just show you an example of that. This is from a couple of days ago. So this is for the S&P 500 signal, the combined signal of SPX and SPY. And I think this was just SPX and SPY. The ES futures was not added to this signal until yesterday, I believe. But anyway, notice the time here. 2:30, and that's when there's a significant shift lower, and I'm looking at the total signal. Notice exactly at 2:30 Eastern Time, that's when this hero line shifts from positive delta to negative delta. Traders are starting to take profits. They come back in for a minute and then start moving lower. So it takes a while for price to respond. So that is the total signal for all expirations, and so that's the total signal for all expirations. Let's take a look at the next chart, and this will just show the 0 DTE options. Again, for the total S&P 500 signal, exact same thing. 0 DTE driving reverses lower at 2:30, and then price finally responds lower toward the end of the day. And then here's the Bookmap chart for Tuesday. Notice the just steady uptrend, and then price finally moves lower. Around 315, something like that, as the pressure from traders taking profits on their 0 DTE options finally resolves to the downside as price reverses lower at the ES 4150 level. And John asks, what's the most effective Bookmap indicator for scalping? And there is no most or better, or I'm looking at a combination of things. I'm looking at Bookmap. In Bookmap, I'm looking at order flow, stops, iceberg, cumulative volume delta, and I'm also looking at hero. So I'm looking at a combination of signals. Also, the levels are very important. So there is no most or best. It's just whatever you prefer and whatever makes sense to you. All right, and so again, I pointed out the 0 DTE options for SPX look like they're driving this rally higher. In this case today, traders are buying 0 DTE SPX calls and selling 0 DTE SPX puts. And that's showing a strong correlation to price action. And also I pointed out that traders may start to monetize that, take profits, and that's what research shows, that the peak 0 DTE occurs, I think, around 2 or 2:30. and I believe that research was from Morgan Stanley. Anyway, Brent presented that in the um, YouTube video that I referenced from just a couple of days ago. So just look for the Spotgamma YouTube channel and the impact of zero DTE options. All right, so that is the S&P 500, and there were some other setups as well. Let's take a look at Apple, and very strong uptrend, price target at the 165 call wall. Notice all the liquidity at that level. The dark orange, those are resting sell orders. That tends to attract price. Let's go take a look at Hero. All right, let's clean this up. Take a look at all trades. So now we're just looking at the total signal. So that again is SPX. Take a look at Apple. And in the morning, there was a strong correlation between options trades, hedging flow, and price action. Go back and take a look at Bookmap. So again, there's the target at the 165 call wall. Let's take a look at Meta. And again, a call wall target, 220, I'm sorry. Notice all the liquidity at that level. Let's take a look at Hero. And if anybody has any stocks that they want me to take a look at, let me know. So again, for Meta, there was a strong correlation between options trades, hedging flow, and price action in the morning. Zoom out for the entire day, and notice how as Hero drops, price drops a bit and levels off, started moving higher, then options traders joined in on the party. So the best setup was early in the morning session. So that's Meta. Confirmation long. Same for Apple, confirmation long with a call wall target. Let's take a look at Microsoft. And similar to the other stocks that we looked at, very strong correlation in the morning up until about 10:30 with options trades, hedging flow, and price action. Take a look at Bookmap. And the price target up above is the 290 level. Notice all the liquidity there, the dark band, all the resting limit sell orders. That price at that level tends to attract price. Let's go back and take a look at Hero. A lot of chop there. Now price is starting to resolve higher. as traders continue to take positive delta positions. All right, that's Microsoft. Let's take a look at Netflix. And this was, I'm going to zoom in on the morning. Very nice setup in Netflix. A divergence long. Notice how price drops right down to the call wall at 340 and then moves higher. And that call wall, a breach of the call wall and a move higher can act as an accelerant. And remember, the call wall is the strike with the largest net. Positive gamma, all the calls at those levels, at that level, for stocks, traders are buying calls, so Spotgamma assumes that traders are buying calls. Market makers are selling calls, and as price continues to go higher, they have to buy stock to hedge their delta exposure. So traders are buying calls, market makers are selling calls. They have to buy stock to hedge their delta exposure. And as price continues to rise, they have to continue to buy stock. And now all the calls at this 340 level and below are going further in the money. Delta is increasing, and market makers have to continue to buy stock to hedge their delta exposure. And let's just take a look at Netflix and Equity Hub here to get a better sense of how that works. So this is right here is the call wall level, the 340 level. That level right there. So now all of these calls at that level and below are going in the money. Their delta is increasing as they go further in the money. Traders, market makers are short those calls, so they have to continue to buy stock to hedge their delta exposure. And at some point, this will slow down as these gamma curves here the slope of the line will decrease at a certain point, and market makers' need to hedge starts to decrease. But around this level, these lines, the gamma curve, for calls shown with orange, and the blue shows puts. Those are both very steep. On this area right here, showing a high rate of change of gamma. All right, that is Netflix. And the next stock that I want to take a look at is NVIDIA. And NVIDIA, there was let's zoom in on the morning again, pretty similar to other stocks. Strong correlation between hedging flow and price action. It took, and this is pretty typical of Netflix, kind of chops around for the first half an hour or so, and then finally starts to move higher. as traders start taking positive delta options trades. Let's go take a look at Bookmap. And notice the reversal higher. Let's just zoom in. Zoom in on the morning. Notice the reversal higher just before 10 a.m. This is a buy sweep shown by these small green dots. Trendline break, then a retest of the 265 hedge wall, and price moves higher. Primary target at the 270 high liquidity. And so far price has not made it up to the 270 level. All right, the next is, actually let's take a look at SPY. Take a look at SPY while we're at it. Showing the same levels in my that I showed on the ES chart, just in my cloud notes here. So there is the support at the 4100 level, chop between the 410 and 411 level until finally resolving higher, a retest of 411. Some consolidation at the 412 call wall on the 4130s SPX 4130 resistance level, and now price is heading up to the SPX 4150 level, and that was actually not noted as a resistance level. I just still have that note from yesterday, I guess, but that is the SPX 4150 level. And that has been resistance in the past. So there's SPX, just a nice steady uptrend. Now heading up to the SPX 4150 level. Okay, let's take a look at Tesla. Let's take a look at Hero for Tesla. And there was, zoom in so we can see this. The only gamma level that was in play this morning is the 182 hedge wall. Let's go take a look at Hero for Tesla. And for Tesla, there was a strong correlation. Not as strong as some other stocks, certainly not as strong as the SPX. Strong correlation between hedging flow and price action. Definitely traders taking positive delta positions. And let's let's just see what they were doing. So they're primarily selling puts today, and that's interesting. That's shown by the rising blue line there. And then they also are net buying calls. But the put sellers are primarily driving price today. So that's Tesla. Positive delta position, options positions helping to drive price higher. Let's go back and take a look at Bookmap. And there's the 190 call wall. Still a few points away. Notice the high liquidity at that level. All right, I'm going to go back and look at the S&P 500. Let's see where price could be going next. So again, the 4150 level, and there's also a combo level L2 at 4149. All right, so now it looks like price is finding some resistance. Let's just see what the RJ, yeah, we'll look at QQQ. I just want to see what the options traders are doing for SPX. Let's go back to SPX. And notice the dip in the line there. And let's separate out. Let's take a look at the 0 DTE. That's also falling. So that could be our 0 DTE options traders starting to take a profit, and it may take a while for that to resolve. And that would be similar to the example that I showed from a couple of days ago from the 11th. All right, RJ asked to see QQQ. And this is why I didn't show QQQ. It's in a nice steady uptrend. It's just that for most of the day, options traders did not have much of an impact on price action. And they were all in the, it looks like they were all in the large cap tech stocks. And we can just take a look at something else in SPX. Let's take a look at NASDAQ. So this is where, see all this green, this heat map is showing where traders are putting their money, and we showed examples from Microsoft, Apple. I didn't show Google, but Meta, Amazon, and Tesla, traders are all taking positive delta positions, and that's what's driving the NASDAQ and QQQ higher. Options trades in all those stocks, and that is that's well over half of the NASDAQ. So again, traders are taking positive delta positions. Let's just take a look at Google. So slightly negative in Google. But in these other stocks, all bullish. All right, RJ, I hope that answers your question about QQQ. So let's go back to SPX. All right, there's a question in Discord. So there is 0 DTE for ES, but let's see. Let's see if there is for SPX. I'm going to go to Thinkorswim. Go to ES here. Trade. All products. So this indicates it's 0 DTE today. This is probably not significant compared with SPX and SPY. So we can take a look at what Hero is showing is next expiry. So if there, for stocks, for example, for Tesla, if we were looking at this for Tesla, it would show tomorrow's expiration, Friday. Single stocks typically have just a Friday expiration once a week, compared with SPX, SPY, and QQQ, which have options that expire every day. So this 0 next expiry is showing 0 DTE for SPX, SPY, and QQQ, and then it's showing the Friday expiration for single stocks. All right, so the combo product, that's the 0 DTE for Hero for ES. And it looks like, again, from the options chain of Thinkorswim, there is a 0 DTE for ES. And then they also have the combo product, which is this, also showing 0 DTE, which showing, again, next expiry, and you have to know if that is a 0 DTE or a Friday expiration or whatever. And I think I've shown that today. Here's SPY, versus SPX, and I think it's pretty clear which is driving ES behavior. So for the SPX, for the S&P 500, whether you're interested in trading SPX, SPY, or ES, I typically look at the combined signal, and that's pretty close to what's happening today. And I've just found that recently this SPX signal is maybe a little bit more clear. But if you want to be completely thorough and look at everything, I suggest this total signal of the combined SPX, SPY, XSP, which is not significant, and ES. And in YouTube, Bartos asked, do you lift? And I'm not quite sure what that means. If you're talking about weight training, I do some weight training, mostly body weight exercise, but I'm primarily a cardio guy. All right, final question. Doug, is the selling now selling calls or buying puts in SPX? So let's take a look at SPX. let's clean up this signal so that we're just looking at, we'll take a look at all expirations. Puts and calls. So really they're selling calls now and buying puts. So this makes sense. That's shown by the falling orange line here. Traders have been buying calls all day, and they're starting to sell those, take their profits, which totally makes sense. You know, this has been rising all day. Time to take your profits. Right, so it's starting at somewhere around 215 is they're starting to sell calls. Let's go back and take a final look at Bookmap. Oops. And you can see that has somewhat confirmed with order flow here. And I would, you know, if I would watch this for a while. But what I'm talking about is notice the aggressive sellers coming in here, all these pink dots coming in. But I would certainly watch this for a while before looking for a short. All right, Bartos, again, I'm a cardio guy. I'm very thin, very small guy. Cardio, resting heart rate in the mid-30s. I just do a little bit of body weight training to maintain some strength. And then Floyd Garage asked, do I care about bonds? Yes, I don't look at them that much for day trading. Maybe I should. All right, I'm going to wrap it up. Keep an eye on the S&P 500. Let's see if traders start to monetize their zero DTE options, and we'll keep an eye on it. And again, tomorrow we've got retail sales at 8:30 a.m., consumer sentiment at 10 a.m., and we'll go over that tomorrow. So I want to thank everybody for your questions and comments, and thanks for watching, and I will see you tomorrow.